Showing us right at 12 o'clock. So I'll officially kick things off. Good afternoon and welcome to our 10th session of the 2024 Yellowbook Training Series. Today we're going to be discussing governance, risk management, internal control deficiencies, and ongoing management of your own internal controls. I'm Rachel Windett with Sikich University, and I'll be on to support you all today. We also have Rachel Hawley with our marketing team on with us. She and I will be screening questions and comments as they come in. For CPE today, we will have 4 polls. They'll come up throughout the session, so please make sure you complete at least 3 to get that CPE credit. This recording will be made available on demand in a few days following the event. You'll receive an email with that information. For this session, we are joined by Steve Randall and Melanie Mui from our Governance, Risk, and Compliance team. Steve is a principal and leader of the GRC and has over 30 years of experience of management and consulting. He specializes in project management, operational efficiency, and conflict resolution. He provides independent counsel, identifies core issues, develops strategic solutions, and offers leadership to clients facing challenges. Steve actually joined Sikich in 2023 through the acquisition of Vanya Global, where he was managing partner. And then we also have Melanie. She's an internal audit director in our Sikich Governance, Risk, and Compliance Service. She has more than 20 years of experience serving a variety of industries, including manufacturing, energy, government, and not-for-profit. Melanie continues to demonstrate the ability to lead, motivate, and manage teams across multiple locations for the delivery of high-quality services. So thank you again for joining us, and I'll officially hand it over to Steve and Melanie.
Thank you, Rachel. So as Rachel said, my name is Steve Randall. Thanks for joining us today. I am a principal with the firm. I lead the corporate governance, risk management, and compliance practice. I live in Chicago, and as Rachel said, I've been with the firm for almost 2 years. In my role, I get to work with great people like Melanie while serving and advising phenomenal organizations and the people they employ. Sikich provides a unique platform to spread the word about the importance of internal controls in risk management and the strategic role internal audit plays or could play in organizations. As Rachel alluded to, I've been doing this for quite a long time. During today, we'll try to share some of our experiences with you. I look forward to the discussion. If you have a phone handy, the QR code in the upper right-hand corner takes you to my LinkedIn profile. Feel free to connect if you're interested. If we're connected already, feel free to hit me up with a message and let me know how you thought today's session went. Rachel already talked about the Q&A, I'm sorry, she talked about the polling questions. Q&A will be open throughout the presentation. We'll try to get to as many questions as we can, either answer them in real time or get to them at the end of the session. With that, I'll pass it over to Melanie.
Steve. Good morning, afternoon, or evening, depending on where you're joining us from. It's great to be here with all of you today. So my name is Melanie Mui, and I'm a director within the Sikich GRC internal audit practice. I've been with the firm, like Rachel said, almost 2 years now. And before I forget, feel free to scan my QR code to connect with me on LinkedIn. So I was born and raised here in Chicago, and I started my career many years ago at Deloitte, where I specialized in government and not-for-profit. My main clients there were the City of Chicago and Catholic Charities. And then I later went on to work for the Chicago Inspector General's office. For the past 20 plus years, I focused on internal controls, risk management, and internal audit in the government, energy, and manufacturing sectors. I currently lead the internal controls assessment practice here at Sikich. So now I'll pass it back over to Steve to get started with the juicy content y'all are here for.
Yeah, Melanie tends to downplay her skills and experience. She also works in a variety of other areas like higher ed, not-for-profit, and a variety of other things. So let's get started. We're talking about independent assurance and the important role played by internal audit. And I got to say, if this doesn't have you sitting on the edge of your seat, well, maybe you should change seats. That's a joke and a lame one at that, and likely not the last one I will try to tell. Melanie and I will do our best to share some of our knowledge in the most interesting and lighthearted way possible. Looking at the title, you might be asking yourself, what does it mean? So I wanted to break that down before we jump into additional content. So let's start with the word assurance. Assurance refers to the degree of confidence that stakeholders have in the reliability, accuracy, and integrity of financial and non-financial information, as well as the effectiveness of processes and internal controls within your organization. Essentially, it's how much confidence you have in your financials, in your compliance, your safety and security, your data integrity, your data security, any and all things within your purview. Moving to the word independent, it's as you would assume. It's someone free from a conflict of interest. Could be a third party like Sikich, or it could be someone internal to your organization who is independent or has an independent role. Combining the two is really where the magic happens. An independent party providing assurance to stakeholders that your organization is operating as expected. And that's exactly the role internal audit plays. Even more simply put than this, as stated by arguably the most influential internal auditor in history. Many of you recognize this quote from Ronald Reagan. What most of you won't know is that in between his acting career and political career, he was an internal auditor. He must have been. Otherwise, how would he come up with trust but verify? And that's what we internal auditors do. Information is constantly flowing in and out of your organization. And you and your colleagues are handling and processing that information on a continual basis. Also, money, whether it's grants, TIFs, taxes, fines, and other revenue, is constantly flowing in and out of your organization. And similarly, you and your colleagues are processing and accounting for those funds on a regular basis as well. So the question I have for you, and what I want you to consider today, is what are you doing to protect and secure the flow of information and the flow of funds? It's a rhetorical question for now, but it's a question I believe you should be thinking about, especially during the presentation and periodically through the day-to-day. If you spend some time considering what I call organizational defense mechanisms, you'll create a strategic shield that will allow you to focus your attention on what matters most. So here's the agenda. Rachel alluded to it. It's why everyone is essential to governance, the importance of risk management, internal audit's role, common internal control deficiencies, ongoing management and monitoring of your internal controls. Throughout the presentation, there's the 4 questions. Your answer to these questions are a requirement for getting the full CPE credit. And here is the first question. Rachel.
Okay, so you'll see that poll launched. How concerned are you about the likelihood and/or impact of internal/external risks to your organization? So are you extremely, moderately, slightly, or not concerned at all? We do have some who are not concerned, so I mean, that's
Yeah,
great.
good for you. We might scare you by the end of this. So Melanie, I don't know if you're seeing the results in real time. I figured out how I can capture it. We're looking at 65% or so, either moderately concerned or extremely concerned.
Yeah. So I just closed out our poll, and yes.
Okay. Well, you're in the right place if you're concerned. We're going to give you some helpful hints and tactics to lower that level of concern. So finally, on to agenda topic number 1. Melanie, I hope you don't mind if I take this one.
It's all yours.
Okay. All right, just checking. All right. So leadership, whether hired, elected, or appointed, sets the tone for your organization and is expected to promote and foster an ethical and responsible culture. Most of you will understand this as tone at the top. Leadership not only has to set the tone by what they say, they have to reinforce the tone by what they do. There are numerous stories out there about a leader or official losing his or her job because they crossed an integrity boundary. They simply were not walking their talk. While it starts at the top, governance is a responsibility that should be shared throughout your organization. The head of accounting, for example, sets the governance for accounting and financial reporting, playing a crucial role in identifying and managing financial risk. They're responsible for establishing robust financial controls and systems to safeguard assets and mitigate the risk of financial mismanagement or fraud. Employees also play a critical role in effective governance in several important ways. They do so by adhering to high ethical standards, by complying with internal policies and procedures and external regulations. They also have a responsibility for and hopefully access to channels for reporting misconduct or unethical behavior. They should avoid situations that pose an obvious conflict of interest. They have a significant role in shaping the culture and ethical tone. And they influence stakeholder relationships through their professionalism, responsiveness, and commitment to service. All this to say the actions and behavior of everyone collectively influences governance practices and your ability to build trust with stakeholders. The governance expectations should be documented, understood, and shared across your organization. So like I said, governance is everyone's responsibility, not just leadership, but everyone has a hand in it. You need to ensure socially responsible and ethical behavior. You need to implement systems and procedures to mitigate risk. You need to ensure the integrity of internal controls, the security and availability of technology and information systems, and the accuracy of financial reporting. You need to ensure the disclosure controls and procedures are compliant with all relevant laws and regulations. You need to ensure compliance with all applicable legal and regulatory requirements. You need to ensure the principal operating risks are identified and managed. A breakdown in any one of these could spell doom for your organization. So let's take care of our governance responsibilities so that when your organization makes the news, it's because of the good deeds you do and the mission you serve and the value you create. But if we're only that easy, right? Sometimes it can seem as if you're Sisyphus. He's the guy that had to push up that boulder up the hill. You can have the greatest ideas, the biggest ambitions, but if you don't have the resources, it's nearly impossible to execute. And if you're like most places I've worked for or worked with, resources are not unlimited. You likely can't allocate adequate funds to instantly make your vision a reality. People and organizations, the nefarious ones, are constantly trying to bring you down and distract you from your mission. You're likely relying on dated technology, resulting in overly manual processes. And as far as internal controls go, if I were to guess, I'd say you're probably great at rallying around a problem. But too many times a problem could have been or should have been avoided if someone would have just done the right thing at the right time. Because after all, we're not in the firefighting business, unless I guess you are in the firefighting business, which you may be if you're on this call. But putting out little fires everywhere or big fire or one big fire distracts you from your mission. And conducting triage in operations is time consuming, wasting valuable resources that could be used to support your mission and objectives. Even with these challenges, and maybe because of them, your role in governance is critical. Because you can't afford a 6 or 7 figure wire fraud. And later I'm going to try to discuss some of these if given the time. Wire fraud schemes are happening every day still. You can't afford a security breach. Attackers are out there 24/7, and it isn't a matter of if you're targeted, it's a matter of when. And you better have good backup and recovery capabilities because you can't afford to be held hostage by ransomware. You're definitely storing confidential data, so you can't afford a leak. You can't afford to shut down because of a disaster, accident, or act of God. You can't afford the loss of resources or funds due to mistakes, theft, or fraud. You can't afford accounting errors to impact your funding sources or your regulatory responsibilities. But no matter how well intended you are, villains are out there trying to undermine your stability. They're dressed in normal clothes, doing normal things until they're not. What's showing on the screen are recent headlines I pulled from Google, all within the last weeks or last months. These are impacted government entities of all shapes and sizes. Some might look familiar to you. Hopefully, none of them are yours. Unfortunately, these are not the only examples. This slide could have gone on for a very long time, as it already is, but for the sake of time, I limited the list. And as you can see, or we'll see momentarily, some of these are cyber attacks and data breaches. Did you know that numerous studies indicate that human error is behind most data breaches? A malicious actor may instigate, but it's human error that opens the door. And it's not limited to just cyber attacks. Many problems Melanie and I find out about are due to human error. And when everything is seemingly running smoothly, it can be hard to consider a plan for things going wrong. But as I showed on the previous slide, bad things can happen at any time and anywhere. And as I said, most of the problems we observed are not perpetrated by someone acting maliciously. On the contrary, it's a good employee, a loyal employee, a faithful employee, someone trying to do the right thing for their organization, but they just make a mistake. Sometimes that mistake is minor, but sometimes that mistake is catastrophic. But still, it's just a mistake, and everybody makes them. The busier we get, the more stress we're under, and the more likely we are to make mistakes. So we need to have mechanisms in place to stop these errors, what I earlier referred to as organizational defense mechanisms. And we need to independently review these mechanisms and make sure they're effective. Mechanisms for today's thing equals internal controls. And independently reviewing them means internal audit. Now, before going further, I want to share some independent data, so it's just not me blabbering on here. This is from the Association of Certified Fraud Examiners and their 2024 report to the nation. This report shows facts and figures from annual studies on fraud. And what this image shows is 17% of all fraud happens within the government, with a median loss of $150,000. The average loss, though, is $2.3 million. So think, how would these losses impact you if it were to happen to you? On the other side, wouldn't it be great to prevent it? And for the fraud that impacts the government, 47% is at the national level, 29% is at the state, and 23% is at the local. So everyone is susceptible. And you might be thinking, Steve, I work for a small municipality. It couldn't happen to us. Well, 21% of fraud happens to organizations with less than 100 employees, with a loss of 141,000. That's the median loss, not the average. This chart shows the breakdown by organization size, and I'll give you a second to review, and feel free to take screenshots or pictures of this. This information is, however, free from the ACFE website, the Association of Certified Fraud Examiners. Now you may be thinking, Steve, my team has worked together for so long, it can't happen to us. More than half of all perpetrators worked for their organization for at least 6 years. 31% of the cases were people who worked for more than 10 years. So again, it can happen anywhere, by anyone, to anyone. But here's the stat I found most interesting. Right there in the middle. 82% of organizations modified their internal controls, their organizational defense mechanisms, after the fraud. 95% of those new internal controls are effective. So why wait until a fraud? And really, what he said before, a couple slides ago, it's not just fraud. While these last few slides discuss fraud, I already talked about mistakes, the unintentional errors. Internal controls can prevent or at a minimum detect when mistakes happen. And why wait till it's too late to implement a better defense? All right, so let's put a bow on governance for this morning. Similar to a lot of things in life, it starts with us as individuals. Obviously, when working in the governance sector, there's a significant amount of responsibility. And as I mentioned, nobody wants to end up in the news for the wrong reasons. All of you are held to the highest ethical standards. And for governance and enterprise risk management strategies to work, you as individuals must be a part of that. Otherwise, you won't be effective. And we're on to our next polling question. Rachel?
Right, so I've launched that poll. Do you have updated policies and procedures? Another 10-15 seconds. Remember to get this this poll in for CPE.
So Melanie, it looks like 80%, a little more than 80% have them, and they've been updated within the last 5 years. Some of them do it on a regular basis, and some of them at least within the last 12 months. So that's fantastic.
Yep.
I applaud you for doing so.
It's not easy
Melanie,
to get that done.
are you shocked?
A little bit.
I'm a little shocked too. That's good. Good for you. So I guess for the audience perspective, you're concerned about the effectiveness of your internal controls, but you're confident in that at least your policies and procedures have been updated. All right, Melanie, over to you.
All right, thanks, Steve. So risk management is essential because it helps organizations and individuals anticipate, understand, and mitigate potential issues that could harm their objectives, finances, reputation, and even operations. All organizations, no matter the size or industry, should have risk management strategies in place. Some are informal and some are more developed than others. Risk management is crucial in preventing losses and reducing costs, enhancing decision-making, and ensuring legal compliance. Ultimately, it builds a foundation for long-term stability, performance, and success by proactively addressing uncertainties before they become critical issues. Next slide. As we go through this today, the questions we want you to be thinking about are: what are your risk management strategies? And not only if those strategies can identify and mitigate risks, but are those strategies designed and operating effectively? If your risk assessment is solely based on a feeling or based on your trust in the individuals performing the tasks, there are plenty of stories where that trust has been broken or even failed. So you may want to consider testing those strategies to ensure they are appropriate and operating as intended. If you don't have any form of risk management strategies, what can happen? Well, like Steve said, fraud. He showed the slide of various headlines of real-life frauds that had recently taken place. And fraud happens at both large and small organizations. If you do have formal risk management strategies, that's great. You're effectively improving your chances of identifying risks to your organization. And when you identify those risks, you can better effectively mitigate them. Most organizations employ the 3 lines of defense model, which we'll go through on the next few slides. The 3 lines of defense model facilitates strong governance and risk management, where all the roles within the 3 lines are working together collectively to contribute to the creation and protection of value, which is a win-win for everyone. Depending on the size, complexity, and staffing of your organization, you may have stronger first lines of defense and less so on the second and third lines. Or perhaps in smaller organizations, the first and second lines are performed by people wearing multiple hats with multiple responsibilities, and there's very little difference between the first and second lines. We'll go through these lines of defense in more detail in the coming slides. But as you can see on this slide, the first line manages the day-to-day operations. It also designs and implements the internal controls. The second line provides expertise and support such as risk oversight and compliance, as well as monitoring and reporting. Lastly, the third line is independent from management and promotes and facilitates continuous improvement, such as evaluating controls and risk management effectiveness.
So what we've seen, and it's pretty obvious, like the smaller your organization, the less likely you are to have a third line. And the first and second line get blurred. And we'll talk about, in a little bit later, talk about some strategies to mitigate that risk.
So the first line of defense is your employees and what they're doing in their day-to-day jobs. Hopefully, they're following established and documented policies and procedures. So policies and procedures, whether defined or informal, preferably defined, help guide employees in their jobs and how they're supposed to perform their tasks. Included within those policies and procedures should be your internal controls. We'll talk more about internal controls and how they're defined on the next slide. When internal controls are designed and operating effectively, they help protect the organization. If there are weaknesses or cracks in the first line of defense, which this line is truly foundational, it becomes harder to identify issues. So there's an increased chance of fraud and risks you're not aware of coming to the surface and causing a bigger problem than there needs to be. Segregation of duties is probably the most important control to have in place, especially in the first line. This means you shouldn't have one person having too much opportunity and authority, allowing them to perpetrate a fraud. The more you're able to segregate duties, the more it allows for better protection of the organization. Many organizations we work with struggle with segregation of duties due to the fact that they simply don't have enough staff. However, there are a number of risk mitigation strategies that should be implemented with smaller staff. So your organization can help the first line of defense do their jobs effectively with 1, job descriptions that include specific roles and responsibilities. 2, policies that are formal rules or guidelines that explain the organization's standards that must be followed. An example is a policy requiring that bank reconciliations are performed monthly. And 3, procedures are step-by-step instructions on how to perform a specific task. So building off that last example, it could be the steps on how the staff accountant performs the reconciliation. And lastly, number 4, internal controls, which we will discuss on the next slide. But an example of that would be having the accounting manager review the account reconciliation performed by the staff accountant. Next slide. So the Institute of Internal Auditors is the governing body for the internal audit profession. They set the standards all internal auditors should conform to. Their definition of a control states, a control is any action taken by management, the board, and other parties to manage risk and increase the likelihood that established objectives and goals will be achieved. Internal controls are basically policies and procedures implemented by an organization to ensure their financial reports are reliable, operations are efficient, and activities are compliant with applicable laws and regulations. Internal controls are essential to good governance. They should be documented in procedures, understood by employees, and reviewed by management and leadership. Also, they should be tested to ensure they are effective. We talked a little bit about testing, but we'll talk more about the importance of testing internal controls in later slides. The second line of defense, as discussed earlier, could be the same individuals as the first line of defense. This might be the case for lean organizations. Whether you have a full enterprise risk management group, team, or you just regularly sit with your teams to discuss risks and how to mitigate them, it doesn't matter. The important thing is that it's being done. Meeting to discuss what risks you should be considering in the coming year and how you should address them is a mitigation strategy that can be applied at smaller organizations. For some, when talking about the second line of defense, it could be an outsourced risk mitigation strategy. Identifying, understanding, and then applying a mitigation strategy are the important things. If you're not in the process of identifying risks, you won't be able to determine how to remediate issues or apply a risk mitigation strategy to them. Similar to the first line of defense, if risks are not identified or there are weaknesses in the second line of defense, then the chances of those risks occurring or you being unprepared for unidentified risks increases. And I believe our next polling question is coming up. Rachel?
All right, so I've launched that poll. How confident are you in your internal control environment? Extremely confident, moderately concerned, confident, extremely concerned, no opinion at all. So we'll give everyone another 10 seconds or so to reply to that. Remember to get that in for CPE as well. Closed that poll. So it looks like about 42% is confident, but sometimes I have restless sleep. And then we do have 11% that don't have an opinion.
Yeah. So, I don't know, Melanie, are you seeing those results?
Yeah.
You are? Okay. So I don't have to keep repeating them to you. So that's good. So we've got, by and large, updated policies and procedures, a healthy concern over internal controls, but confidence that they're working. So that's good.
Okay. So as I mentioned earlier, all organizations, no matter the size or industry, should have risk management strategies, where again, some are informal and some are more developed than others. So internal audit's role is to be the third line of defense. For most government organizations, we find this to be the most neglected line of defense. The third line of defense is independent assurance and establishes accountability within the organization. It is important that individuals know someone will be monitoring to ensure things are being done appropriately. When we perform internal audits, or when we are the internal audit function for organizations, we conduct risk assessments, look at the design of internal controls, and test the operating effectiveness of those controls. We don't just rely that controls have been implemented and that control owners are performing them. We trust but verify through testing. Unfortunately, most smaller organizations do not have a third line of defense, and they can benefit greatly from doing periodic internal controls assessments like Sikich does for our clients. We have performed these for several organizations where we go in, review controls over a wide range of processes, and give our assessment related to the internal controls designs and whether they're operating effectively and intended. We also identify control gaps, weaknesses, efficiencies, and redundancies. This gives some assurance to the leadership team and again, establishes accountability within the organization. If you don't have a third line of defense, how do you really know that what you've designed is truly functioning properly? And if there were changes in people, processes, and/or your technology, what happens to the design of those controls? Again, there is a potential risk that controls may not be working, and if no one is monitoring, you may not know until it's too late. So I'll turn it back to Steve to talk more about why internal controls are needed.
So before I jump in, I would just backing up to something you mentioned on this slide about having assurance and testing controls. I just started working with a client who their annual risk assessment process, which was a fine process, was 6 of the leadership team would sit in a room and talk about the most significant risks to the organization. And then they would decide amongst themselves how high the risk was on a likelihood and impact, and what mitigation strategies were in place, and if they thought those mitigation strategies were effective. So fine from a risk assessment perspective, getting the senior leadership team's opinion on that. Where they failed to take it to the next level and really test those mitigation strategies. They assume their effectiveness, and not coincidentally, each of the past 3 years, they've had a significant failure, so much so that they're now looking at validating the effectiveness over those controls. They're doing it now. It would have been good for them to do it before they had their 3 strikes, but as they say, 3 strikes and you're out. Okay, next slide. Here we go. Yeah, so I guess I just blew this slide by sharing that example. So why are internal controls needed? To make sure things happen as intended. Melanie and I both, as we said, live in Illinois. I'm actually sitting in our Naperville, Illinois office, but I live downtown, down the street from DePaul University. One of the accounting professors at DePaul is named Kelly Richmond Pope. A few years ago, Kelly produced a documentary called All the Queen's Horses, and many of you have probably heard about it. But I encourage you to look it up if you haven't. It's called All the Queen's Horses. And there it is. It's a story of a small town of Dixon, Illinois, which also happens to be the birthplace of the most influential internal auditor ever. You know, the trust but verify guy. Anyway, Dixon was a victim of the largest municipal fraud in U.S. history. The villain who perpetrated the fraud was a long-standing and trusted employee. Kind of backs up the data we showed earlier. The hero was a whistleblower, and she was a soft-spoken, loyal employee who simply asked one question. I'm not going to tell you what that question is. Go watch the documentary, and I think it's like 58 minutes. It's quite a story. Again, all the Queen's Horses for those of you who are interested. I think it might even be on Netflix. So far, we explained the importance of governance and the responsibility that is shared across your organization. We've showed some scary things that can happen in the absence of internal controls. Melanie has explained the 3 lines of defense of risk management and introduced the importance of internal audit. So with that, I thought it'd be important to take a slightly deeper dive into internal audit by walking through a sample internal audit charter. Hopefully it helps describe what internal audit does. An internal audit charter is a formal document that defines the purpose, authority, and responsibility of an organization's internal audit function. It serves as the foundational document that outlines the key elements and principles governing the internal audit activity. The first section is always purpose and authority, what you see here, providing an overview of internal audit. The purpose of internal audit is to provide an independent appraisal of risk management, internal control, and governance processes. It should operate under the authority of the board or the highest governing body of your entity. It has to be the highest level. And you may be asking, why the highest level, Steve? Well, it's to assure it's operating independently of management influence or interference when performing its duties. And there's that word again, independent. Organizations that do not operate internal audit in an independent manner create unauditable departments. And I had a client who wouldn't audit the billing department because of the influence the head of billing had over the audit director. Billing was noted repeatedly as a high-risk area by many executives, but it was never part of the internal audit plan because the influence the head of billing had. Head of billing actually was the supervisor of the head of internal audit at a prior company. So in this case, internal audit was not independent. As we've discussed, internal audit evaluates the adequacy and effectiveness of governance, risk management, and internal control processes in all areas of your organization. So I ask you to take a minute and think about your organization. Maybe grab a pen and paper or open up your OneNote. What is your top risk, or what are your top risks? Write them down. How much time, money, or resources do you invest in mitigating that risk? Has anyone ever independently evaluated the risk mitigation procedures? Hopefully so, but if not, why not? Remember, the greatest, most influential internal auditor ever suggested that you should trust but verify. And verify doesn't demonstrate distrust in management. It demonstrates to your stakeholders that you take the risk management responsibility seriously. Melanie mentioned it earlier, but there's one thing internal auditors love more than anything else, and it's risk assessments. Almost everything we do includes a risk assessment in one form or another. And one primary use of a risk assessment is to conduct it across the organization to identify key areas of focus for internal audit. The result of this risk assessment, multiple things, but one of the things is a risk-based internal audit project plan. Each project on that plan will evaluate the design and operating effectiveness of internal controls. These projects are narrowly focused on a specific area of the organization. Internal audit will also review the effectiveness of the compliance program, assess the reliability of financial and operational information, provide recommendations for improvement, and help promote an ethical culture within your organization. Oh, and all of a sudden we're on another polling question. Rachel, you want to pop that up? It is the last one, but don't tell people that.
So our last poll is, do you have an internal audit function? So majority right now, I'm saying no.
Yep, as I mentioned earlier, Most government agencies don't have the third line of defense.
Yeah, so it would have really surprised me if those numbers were the other way around.
Mhm.
But considering the answers to the earlier questions, I'm happy that you're on the right track. It's important to review your policies and procedures. It's important to have internal controls embedded within those policies and procedures. I think it's important um, to evaluate the effectiveness of those internal controls, but it's really hard for most organizations to have dedicated resources for internal audit. So this slide certainly doesn't surprise me, but congratulations to those that do. Hopefully it's for your organizations more than just a compliance and or investigation function. So Melanie, I'm looking at the clock. We've got quite a bit of time to share stories, which is probably why most of the people are here. So now we're going to share some examples of internal controls. Oftentimes, we get called by a client after something breaks, so we can assist with triage, essentially picking up the pieces after something bad happens and figuring out root causes. Other times, we're asked to proactively help so that things don't break in the first place. And these are those stories, the good and the bad. The goal is to have you learn and apply lessons to your organization. And so hopefully, for the vast majority of you, based on the way you're answering the questions, these will sound familiar and give you a path to make some enhancements. Now, before I change slides, understand there's no magic wand. It's not one size fits all. Internal controls should be designed specific to your organization. There are certain risks that you want to avoid, like duplicate payments, but the internal control environment should be custom to the way you process your transactions. Melanie.
Okay, so as I mentioned earlier, one of the best ways to protect your organization is also one of the most common deficiencies that we see, which is segregation of duties. One single person should not have complete access to a process without another person being involved. And this is very important for organizations no matter the size. We can't emphasize this enough. Some examples of conflicting duties are the same person being responsible for both preparing customer bills and collecting payments. So the person who handles billing could potentially manipulate customer accounts or misappropriate funds without detection. Or the person responsible for recording transactions in the accounting system also reconciles the bank statements. This lack of segregation of duties means there's less oversight, and errors or irregularities in recording transactions may go unnoticed. Segregation of duties can be difficult to achieve in smaller organizations, but we've helped countless organizations with this challenge. Another common deficiency we see is with account reconciliations. Organizations are hopefully performing reconciliations in a timely manner, which include investigating aged transactions, large or unusual transactions, and any differences, and then performing an independent review. Account recs are also controls to monitor or detect items that may be indicative of breakdowns in your processes. An obvious area you want good segregation of duties is with cash. You always want to segregate duties between who's receiving, recording, and reconciling the cash. Also, an important task related to cash is reviewing the bank authorities at least annually. In some situations where an employee leaves an organization or switches departments and no longer needs access to the banking, their access needs to be removed immediately. Under setup and payments is another area we see deficiencies. You want to ensure that these responsibilities are segregated. You never want the person who is inputting vendors into the system also being the person who releases and/or approves payments. Steve can share some fraud examples with you now.
Fraud and just some mistakes. But so Melanie, what you just laid out isn't it's not that overly complicated. Some of it is should be self-evident. The problem we
Mhm.
see is that it's also easy to ignore or get too busy to do. And your monthly account rec that you say you do, all of a sudden it's 6 months or 12 months and you haven't done one. You say you review user access or terminate access, and then all of a sudden 6 or 8 or 12 months you have someone working in some other area that still has access to your
Mhm.
ERP system. It happens all the time. I've heard, I mentioned this earlier, and maybe I would have time, so we do have time. I've heard multiple stories over the past couple of weeks of organizations that have been victimized by payment fraud schemes. Now, these have been going on for years. A very well-known organization in Chicago about, gosh, I don't know, 7 or 8 years ago, called me because they fell victim to this. And it's in multiple cases where it was the vendor that was hacked. So a
Mhm.
supplier to your organization is hacked. And the hacker then got a hold of an invoice. And on that invoice, changed the banking information for payments and sent that invoice to the organization. And the organization doesn't check the new banking information and sends the payment. So again, our first one we investigated was how long, maybe a decade ago, I don't recall, but they've been going on nonstop ever since. And again, it's some basic internal controls can be set up um, to make sure that doesn't happen. In some stories, in some examples, verification procedures were there, while others were non-existent. And then the cases where there were verification procedures, they just weren't followed. In one specific story,
Mhm.
the perpetrator and the victim only communicated via email. That's a red flag. Banking instructions change on a invoice, call the vendor, call the supplier to make sure that it's the supplier that was actually doing it. The victim requested a bank letter from the perpetrator. They said, okay, it's via email. They said, send me a letter from the bank verifying that this is yours. Unfortunately, it was an international bank, so they should have had a little more skepticism than they did. And the request should have gone directly to the bank, not to the perpetrator. Of course, they didn't know it was a perpetrator at the time. The perpetrator provided obviously, in my review, it was an obviously fraudulent bank letter, but the victim accepted it without the necessary professional scrutiny, because the victim was super busy. It was during COVID, and they were super busy. It was a sad ending, resulting in a $325,000 fraud. It's another example, though, if you think back to what I said earlier, of an employee trying to do the right thing, but making a costly mistake. The instigator was a nefarious party, but the reason it was successful is because someone was too busy. Another example, I'll give you the Cliff Note version of All the Queen's Horses. Over a period of 2 decades, from 1990 to 2012, Rita Crudwell embezzled a staggering amount of money from the city's funds. The primary method she used was to create a fictitious bank account in the name of the city, but the account was in reality her own personal account. She diverted city funds into this account and systematically siphoned off millions of dollars. I said it was the largest municipal fraud ever. Crudwell's embezzlement was possible due to a lack of proper internal controls and oversight. Obviously, she was able to manipulate financial records, conceal her activities, and avoid detection for an extended period of time. You can see the lack of segregation of duties, the access that she had, because she was a trusted, longstanding employee. Melanie?
The next step for common controls or deficiencies are expense reimbursements. With the expense reporting processes, you want to make sure that there is an expense reimbursement policy, as well as someone reviewing the support that's provided. I've seen several cases where an employee travels for business and extends their stay for a personal vacation. And then sometimes they'll come back and they'll run their expenses through and include the personal part of their vacation along with the business expenses. If someone's not reviewing this information, it can easily get reimbursed without a second guess. Okay, and the next thing is for payroll, you want to make sure that there are controls around new hires and any changes. Without having an independent review of payroll changes, it's possible for someone to change their salary without being noticed. Okay, we've talked about general policies and procedures, but we didn't talk about the importance of having a conflict of interest policy or a whistleblower policy. Now, the whistleblower programs, if implemented properly, allow employees to report issues or potential issues anonymously. And for the final item on this slide, most of what we've talked about is on the financial side. But there are a lot of controls and issues that come up in IT. But in small IT departments, you can have a lot of responsibilities across very few individuals. Or some of those individuals may have what's called privileged user access, essentially giving them the keys to the kingdom. They can make changes within a system without anyone noticing if the system does not have an audit trail. One of our clients was a very fast-growing technology company, and in their efforts to make sure they were addressing questions from the business in a timely manner, they gave several of their IT individuals privileged user access. No issues were identified, but the ability and the opportunity were there to be able to do anything. So Steve has some other examples to share with you in regards to that.
So I want to back up real quick about expense reimbursement. Like any one expense reimbursement violation isn't going to be huge dollar amount, or shouldn't be huge dollar amount, because you'd think if someone all of a sudden put hundreds of $1,000s in their expenses, it would get caught. Well, it takes once for someone to gain some confidence in the fact that they're not going to get caught and do it over, or maybe it wasn't even intentional. And all it takes is that first time, and someone gains confidence that they can get away with it. There was an investigation we had to do about a division president who had committed expense report fraud over a number of years. And his expense report was supposed to be reviewed by the controller. And the controller never did the review, just rubber stamped it because it was the president of division. And how does he know what the president of division is doing and spending the money on? So while we couldn't prove there was collusion between the controller and the president, I got to assume there wasn't, but it was certainly a lack of internal control over the president's expense reports. There, I'm looking at your example of the privilege access. There's another tech company, medical tech company, that had a small satellite office, and there's an administrative employee in that satellite office. The way the IT department granted system access was based on profiles, which is a good form of internal control. But one of the administrative person needed multiple access, and instead of customizing a profile, they granted that person multiple profiles because it was easy. It was just one person. Her elevated access could have brought down this small little satellite operation. One admin person could have brought down the entire company because it was giving her access to add and approve vendors, add, enter, and approve invoices, and a litany of other access. So a better policy around granting user access, and then a user access review would have been so beneficial. Pertinent to some of you, I would assume, a small secondary school controller has quite a bit of access because they've got a tiny accounting function, finance function. Controller goes on vacation, grants access to a staff person, so the duties could get completed during the summer. So obviously a lot of people take vacation at schools over the summer. Well, the controller comes back from vacation and doesn't think to revoke the privilege access that the staff person has. And that access includes things like we talked about, setting up a vendor, approving invoices, submitting payment for approval, and so on and so forth. Good news is nothing happened because Melanie went in there and looked at their controls without knowing that this was an issue and identified this. I think it was probably 2.5 years after the vacation happened. So that staff person had access that entire time. Fortunately, nothing happened. But we were able to catch it for them and then help them revise their user access procedures. Another very large not-for-profit, someone who was responsible for processing payroll. They used ADP as their payroll provider. So someone had access to the payroll system forever, long-standing employee. That employee retires. Only was it 6 months, 9 months, 12 months later, after retirement, Melanie was in there doing just a general internal controls review and looked at user access and identified someone who's not on payroll had access, admin access to the payroll system. How are we doing on time? We've just got a couple minutes left. So relative to access, make sure that you're reviewing it. Make sure that you have a termination checklist, whether that's because you have decided to terminate someone's employee or they've decided to terminate their employment, or because they've taken a promotion or a lateral transition through your organization. Have that checklist for terminations, especially with the massive increase in cloud applications. It's critical to shut off access to everything to protect yourself. Now, a good story is, and some of those are really good because nothing bad happened. I've got an anonymous tip for an organization that they were improperly recognizing revenue. Primarily, the division CFO was the allegation. The division CFO was committing fraud to make his numbers look better. Fortunately, they had great policies and procedures, like most of you do. We were able to review the policies and procedures. They had a great system of internal controls set up. They had evidence that we could test those internal controls. We were able to perform the calculations, and we were able to prove that nothing malicious had happened. So because this organization did the required diligence ahead of time in the documentation and the development of their internal controls, we were able to give them the green light. Okay, now on to the last topic, and because we're really close on time, I'll go quick, but it's still an important topic. It's the ongoing management and monitoring of your internal controls. So what can you do? One of the themes I talked about was organizational defense mechanisms. You should set out to do the things that will make your organization more stable. Set a strong tone at the top that motivates and encourages employees to be responsible and ethical. Determine what the highest risks are that you face and make sure you mitigate the highest risk first. Take a look at your lines of defense and how you divide the responsibility for risk management and compliance. My next point doesn't apply to most of you because I say dust off and evaluate your policies and procedures and update them as needed. Since you've already done that, I would still look at them and look at, have you identified the important internal controls within there? If you don't have them, create them, and if you need help, don't be afraid to ask. And finally, don't forget about the third line of defense. Periodically review your internal controls by completing internal controls assessment, whether you're doing that in-house or bringing someone in like us. An evaluation of the internal control design and operating effectiveness over the items listed here, like revenue, grants, fixed assets, payroll, and the rest. You want to know how you're safeguarding the assets and preventing fraud. You want to know how you're how you're segregating duties. We do it with a walkthrough and limited internal control testing. And we work with management as those issues arise to resolve those issues, like helping them put a better review policy or reconciliation policy. And we summarize it in a report. And the report's really great because it creates a punch list of management actions that can be knocked out periodically. So I highly recommend those of you that have your policies and procedures and think you have a good internal control system designed to go do testing. Okay, I was afraid we weren't going to have time to get the questions, and sure enough, we're at the top of the hour. With that, the presentations have finished. This is, again, a slide with our QR codes on it to our LinkedIn profiles. Please feel free to connect. We'll review the Q&A and respond directly to those with questions. I want to thank you for your time and interest today. Rachel, anything else before we part?
Nope, just make sure you download those materials before we end this session. And thank you so much to our facilitators for taking the time to talk with us today. And thank you everyone for joining us. Have a wonderful rest of your day.
Thank you.